Are you a veteran, active duty service member, or part of the military family dreaming of home ownership? Let me introduce you to one of the most powerful tools for securing a home, the VA loan. Welcome to the 2025 Ultimate Guide to VA Loans. I'm David Zai, a mortgage loan officer with over 18 years of experience in the Norfolk area, which is the largest military base on the East Coast, and I'm here to make VA loans easy to understand. By the end of this video, you'll know exactly what a VA loan is, who qualifies, how to navigate the process, and why it's one of the best loan options out there. So let's dive in. VA loans are home loans backed by the U.S. Department of Veteran Affairs. They're designed to help eligible service members, veterans, and their families buy or refinance homes with amazing benefits. These loans offer perks like no money down, no private mortgage insurance, and competitive interest rates. Some key features of the VA loan is no down payment. Unlike most loan programs, VA loans allow you to buy a home without putting any money down. There's no PMI. Private mortgage insurance, which is PMI, isn't required, saving you money on monthly payments. Competitive interest rates. VA loans often have lower rates than conventional loans, which means more savings over time. Flexible credit requirements. Lenders set their own minimums. VA loans are more forgiving for borrowers with lower credit scores. VA loans are also assumable. As a veteran, if you sell your home, the buyer may be able to take over your VA loan, potentially saving them money. The way that assumptions work and how it benefits in a higher rate environment is, let's just say you took the loan out at 4% and the market is now 7% on VA loans. If someone assumes it, they can assume it at the 4%. And if there's any difference in the equity and the sales price, the seller would actually have to get a second loan or pay you cash for the difference. Number six, debt reduction to qualify for higher loan amounts. This is only available on VA loans. The VA loan offers a very unique benefit that allows you to use it for debt reduction. You can request the seller to contribute up to 4% of the loan amount towards your prepaids and debt reduction. So prepaids would be your taxes and insurance, and the remainder can be used towards debt reduction. So this is the only loan program that permits the seller to assist in paying down your debts, potentially helping you qualify for a higher loan amount.
Are VA loans only for active duty service members?
VA loans are available to veterans, active duty service members, members of the National Guard or Reserves, and some surviving spouses. You'll need a certificate of eligibility to confirm your qualification. Now, let's talk about an incredible benefit of the VA loan that often gets overlooked: bonus entitlement. If you already have a VA loan and want to purchase another home, you may still be able to use your VA loan benefits without paying off any of your current loan. This is possible thanks to bonus or second tier entitlement.
What is bonus entitlement?
Your VA entitlement refers to the amount the VA guarantees for your loan. It's what allows you to buy a home without any down payment. Here's the great part: if your current VA loan hasn't used up all your entitlement, you can use the remaining portion to qualify for another VA loan. So let's talk about how this works. The VA splits your entitlement into two parts: the basic entitlement and then the bonus entitlement, which kicks in for homes priced over $144,000. Here's a quick breakdown of how this works when you're buying a second home while keeping the first one. Number one thing that we want to focus on is maximum entitlement. The max VA entitlement is tied to conforming loan limits, which are set by FHFA, which is Federal Housing Finance Agency. For 2024, the standard limit in most counties is $726,200, though it's higher in high cost areas. Second thing we want to talk about is entitlement. If your first VA loan was $250,000, the VA guarantees 25% of that loan, or $62,500, which is deducted from your total available entitlement. Anything that's left over is called remaining entitlement. The remaining entitlement can be used for your new home purchase. The VA will still guarantee 25% of the new loan amount based on what's left. Let me break this down with an example. So let's just say you currently have a VA loan for $250,000 and your county's conforming loan limit is $726,200. The maximum entitlement is 25% of $726,200, which equals to $181,550, which is your total available entitlement. Then we look at the entitlement that has already been used. 25% of $250,000 equals $62,500. This is the entitlement that is tied to your first home or your first loan. Then we look at the remaining entitlement. So we take the 181,550, we subtract out 62,500, so that leaves us with 119,050, which is the remaining entitlement. The remaining entitlement can be used for a new loan. With a VA guarantee of 25%, the remaining entitlement allows you to qualify for a loan up to 476,200, which is 119,050 divided by 25%. Different counties have different maximum loan amounts, so be sure to check with the VA prior to applying. Let's talk about some important points to consider. Number one is the down payment. If the new home exceeds your remaining entitlement, you'll need to cover the difference with a down payment, but in most cases, you can still secure significant financing without one. Number two is full entitlement restoration. If you sell your original home or pay off your first VA loan, your full entitlement is restored, and there's no limit to how much you can borrow with no down payment. The third thing to consider is occupancy requirements. Remember, the VA loan is designed for primary residences, so your new home loan on a purchase must be used for primary residence. Credit scores and income standards. You'll still need to meet the lender's credit, income, and debt to income ratio requirements to qualify. This is why understanding bonus entitlement is so powerful. It lets you expand your options without giving up the incredible benefits of a VA loan. Just be sure to shop around, as different lenders may handle bonus entitlement differently. If you have questions about how this works or need help navigating your second VA loan, click the link below to connect with me. Let's now talk about who the parties are that are involved. Here's a breakdown of the team that's involved in your VA loan process and their roles. The first role is very important, and that's you, the borrower. Your job is to provide accurate information, stay engaged during the process, and make informed decisions. Number two is going to be the real estate agent. A real estate agent is an experienced agent familiar with VA loans and can help you find VA eligible properties and negotiate effectively. Need help finding an agent? Click the link below and we'll match you with someone who knows your area, works frequently with VA borrowers, and has a proven track record. The third person that's really important in this is the lender loan officer, like myself. Your lender helps you get pre-approved, secures your financing, and ensures your loan meets VA requirements. The next person that's involved is going to be the processor/underwriter. The processor gets the file together and then submits it to the underwriter, who's like the judge of your loan. The underwriter will then review your application and verify that you meet VA guidelines, including the certificate of eligibility, income, assets, liabilities, and credit history. Next person that's involved is going to be the appraiser. VA loans, like every other loan, typically require a VA certified appraiser or an appraiser to ensure that the property meets the minimum property requirements, which is MPR. Then we have the title company or the attorney. Depending on your state, you're going to choose either or. However, what they do is that they ensure that the title is clear and handle the legal side of transferring the ownership. Home inspectors are really important. While not required by the VA, a home inspection is highly recommended to uncover any potential issues that are not visually obvious that the VA appraiser will not catch. Now, let's move on to pre-qualification versus pre-approval and what's the difference. Before you start looking for a home, you want to get pre-qualified or pre-approved, and let's clarify the differences. A pre-qualification, this is an informal process where your lender gives you an estimate of how much you can afford based on self-reported financial details verbally. The pre-approval is different. This is a formal process where the lender verifies your financial documents such as pay stubs, tax returns, and your certificate of eligibility. Pre-approvals often carry more weight and shows the sellers that you're serious. Here's a pro tip. If you want to ensure a smoother process, get a to be determined underwrite. This gets you fully pre-approved upfront by an underwriter and gives you a clear advantage when making that offer. Now let's move on to the fun part, finding the right home. Once you're pre-approved, it's time to find a home. Work with an agent who understands VA loan property requirements like MPRs, which includes things like safe access, adequate heating, and structurally sound homes.
What if I need help finding that good agent?
That's a great question. Click on the link below and we'll connect you with a real estate agent who knows your area, is experienced with VA loans, and has excellent negotiation skills. The right agent makes all the difference.
What if you find that home with the perfect real estate agent that may need a little bit of repair or a lot of repair?
That's where the VA renovation loan comes into play. If you find a home that needs a little bit of work, a VA renovation loan might be the solution. This program allows you to finance the purchase price and the renovation cost into one loan. You can make improvements like updating the kitchen, fixing the roof, or making the home energy efficient. The key players in the renovation are going to be your VA appraiser because they ensure that the home value aligns with the loan amount post renovation. Licensed contractors, they must provide the bid and complete the renovations to VA standards. A HUD consultant, if applicable. If the renovations are over $35,000, that's when you will need to hire a HUD consultant who will tell you the cost of repairs and oversee renovations to ensure compliance. Now that we've got that all out of the way, let's talk about closing on your VA loan. When it's time to close, you'll work with your title company or attorney to finalize the paperwork and transfer ownership. Remember, some states require an attorney instead of a title company. Make sure you check your state rules. Now that you own the home, and let's just say the rates drop, what are your options? Now that we've covered the streamline and IRRRL options, let's dive into a cash out refinance. A cash out refinance opens the door to a variety of possibilities: consolidating debt, lowering monthly payments, shortening your loan term, funding home renovations, covering education expenses, or addressing other financial goals. Unlike streamlined options, a cash out refinance does require full verification of your income, assets, and liabilities, as well as property appraisals. One of the major advantages of a VA cash out refinance is that you can typically borrow up to 100% of your home's value. However, it is important to note that some investors may cap this at 90%. It's crucial to shop around and do your due diligence. Another benefit is that loan level pricing adjustments are not as stringent as those on standard conventional or FHA loans, potentially saving you money. With no home inspection contingency, this process can often be completed within 15 to 20 days from your application. Let's talk about something that I'm very passionate about: how to choose your lender, wholesale versus retail lenders. Based on 2021 HMDA HMDA data, borrowers save on average of $8,000 to $11,000 over the life of the loan by going wholesale instead of retail. Wholesale lenders work through brokers like me to shop multiple investors, so we do all the shopping for you, and the lender size does matter. So someone like me, we have 250 different options to shop with, whereas other smaller mom and pop broker shops may only have 7 or 8 because they're limited in their resources. And even when you're shopping wholesale lenders, to look around, make those calls, and do those comparisons. Retail lenders. Retail lenders are your banks and direct lenders and your credit unions. They often have fewer options and typically higher rates because they have that middle level management. Before we wrap up, here are my top tips for VA borrowers in 2025. Number one, you always shop around for the best lender and terms. Make sure your lender understands VA loans. Number two, work with an agent who understands VA loans so they know to look for the safety, sanitary, and structural issues. Number three, ensure your certificate of eligibility or COE is in place early. And number four, budget for any additional costs like inspections or repairs if needed. If you're ready to get started or need help finding the right team, click the link below or visit my website, davidzimortgageguy.com. Don't forget to like, hit the subscribe button, hit the notification bell, and share this video with anyone who could benefit from this VA loan video. Thank you for watching the 2025 Ultimate Guide to VA Loans, and thank you for your service.